So it's March 2025. What's going on in the housing market? So Selma Hebb, chief economist CoreLogic, said home prices have mostly been moving sideways starting in late summer through the end of 2024, a trend that may continue into early months of 2025. So that's a national stat. I do think in our area we did see price increases, probably about 5% last year. I think we're going to see in the same ballpark this year. We'll see what happens, with trade winds, with all across the world, stock market pullback, see what that kind of ends up at before it kind of turns that curve. But I don't see any major differences, overall in the market right now. I think we're going to see pretty steady of what we saw last year. I think when you look at it per area, they have the northeast central, east south central at about 0.5% growth. Like I said, I think we're going to probably see, in our area, probably any 2.5% to 5% growth this year. You will see some areas in the country that are downward. In the New York metro area for 2024, the seasonally adjusted average, we're looking at 7.22%. So obviously, depending on where, between New York City, Westchester, Long Island, we are seeing that growth, which is, ultimately what we want to see here. Then you go to rates. What are rates doing? Rates have actually come down a little bit. So that's overall a better thing. With the pullback in the stock market, rates have come down. Remember, rates are tied a little bit more closely to, the stock market usually versus the Fed funds rate that's tied to the 10-year treasury. So, when people are getting at the stock market, buying the treasuries, usually the yields come down a little bit. So that's a good thing. We're looking at that. We're seeing a little bit more affordability. I don't think it's going to do anything more for demand. We have a pretty strong demand, but maybe people pay a little bit more, feel a little optimistic, especially if the dust settles in the political climate right now. So, we're hoping, I think by, maybe the end of the year, maybe we hit that even 6, 6.25, 5.75. I think it's going to be a little bit of a stretch to see it, especially with what we're seeing lately, that the rates get, below that 6 this year, but we'll see what happens. Business Insider said if inflation continues slowing this year, we should see mortgage rates go down a little bit. Weaker economic growth could also help rates fall. I think we're going to see that weaker economic growth. We are going to see inflation, I think, with all the tariffs and things are going to cost more, which I think may cause the Feds to hold a little bit, which will create sentiment in the market. So we'll have to watch it, see if that inflation number picks up a little bit. Hopefully it does not. We'll see what happens at the next Fed meeting, but hopefully they keep it steady for the next 1 or 2 times and maybe drop another quarter, half a point, over time. We'd love to see those rates come down a little bit more. First-time home buyers are looking for mortgage rate buy-downs. To an extent. I think it depends on, what the property is, whether it's competitive property. You're seeing in certain areas that markets are stable. If we look at, 20 properties altogether between active, pending, and sold in the last 6 months, and we have 10 actives, 10 pending and sold, it's a stable market. If we see, 5 actives and 15 pending and sold, it's a pretty strong market. So, what we saw in January, February, there was like 2 actives versus 18 pending and sold just because there was no new inventory to come on. I think right now we're going to see anywhere from that 5 to 10 to kind of stabilize it through the spring with more inventory, and then you'll probably see that demand is higher than the supply. So that's pretty common. People are still looking to buy homes though. There's a stat out that 15% of people are looking to buy homes in 2025, where last year was about 11%. And I think we see that, as rates have come down, nationally for it, and other areas, home prices have stabilized or started to decline. People still need a place to live. Somebody asked me the other day, where are they coming up with this money? And I think, our average first-time home buyer in our area is probably 35 to 40 years old. So they've been working a career for, 10 years or so, and they've been saving. And I think people realize that they had to save. And those are the people that are buying today. They can afford those higher rates, which historically are not that high, but they have a good amount of money to put down. So, overall, to sum it up, I think the market's still in a pretty strong place. It is a great time to sell. It's still a good time to buy because especially if you're going to be there for some time, you're getting in, you're happy, you're in there, and difference between a year or two, it could make a difference in rates or prices, but when you're there, you're happy. As long as it's a long-term horizon, it's like putting money in your retirement account. You're looking 30 years out, and that's where you're going to be. So any questions, want to see kind of what the value is, want to kind of get yourself in the best position possible on how to, be prepped to buy a home this year, feel free to reach out, call, text, email, smoke signal, whatever the case may be, and we're happy to help.